Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
All right, good evening to all the viewers of UInta and everyone online. Hello, today is Wednesday, November 5th. We're going to discuss and analyze two topics for you, providing some information, discussion, and in-depth analysis. So, for example, the first topic is about what happens after a major event. The second topic is the new variable of the U.S. government shutdown. These are the two main headlines. As you all know, yesterday the U.S. stock indices and the market reaction were relatively negative and weak. Today, the Asian stock markets have also been somewhat affected and disturbed, showing a downward trend as well. But let's take a look at this kind of warning. It's actually quite obvious. When the market is going up, there's a saying, rising steadily, but not falling suddenly. That's because when the market drops, does it really fall all at once? There's no need to panic when the market drops. When prices rise, some wonder, is it too much? It goes up gradually, but keeps rising, like recently. But when it falls, people panic or get nervous. That's just how it's described. So, when it comes to this kind of drop, the alarm bells are already ringing. Speaking of these alarm bells, let's imagine a scenario. Whether we're at home, in the office, at a restaurant, or even in a department store, if the alarm or siren starts going off outside, then you definitely have to. First, we would start to wonder, hey, is some kind of danger about to happen? For example, is it an earthquake, a fire, or some other situation? It is a smoke detector, for instance. That's more related to a fire, right? But if it's, say, an earthquake, like an alert on your phone, you might also need to think about taking some simple emergency measures, like hiding under a table or supporting yourself with something sturdy. Or if it's a fire, if you're at home, for example, you might recall whether, in the past year or 6 months, these alarms have ever been false alarms, right? Or is it really happening? If there really is something going on, even if we're not going to just stay at home completely, shouldn't we at least open the door and step outside to check? See if the whole neighborhood or community or the surrounding area has any commotion, any shouts of alarm, or if there's anything unusual happening. In situations like this, we need to assess whether the danger is truly terrifying or if it's about to happen, so that we can try to avoid such a disaster. Okay, moving on to the second topic. The U.S. government shutdown is considered a new variable. Alright, let's welcome our online viewers, Anaya, and also Alice Fu. Hello everyone, good evening. Okay, let's get started with today's first topic. The U.S. stock market has seen its biggest drop in a month, causing concern among investors. For a long time, there have been concerns about tech stocks being overvalued. As we mentioned yesterday, after 6 months of continuous gains, some warnings have started to emerge. The issue of overvaluation has been a constant worry for everyone. There are also concerns about the narrow market breadth and economic uncertainties. These economic uncertainties are lurking in many different areas. For example, actual economic growth or the state of inflation. And of course, there's also the current concern from the Federal Reserve or the market about whether the job market is continuing to cool down or if the U.S. is still showing resilience. But because the U.S. government is currently in a shutdown, some official data isn't available for everyone to see, so people are relying more on private sector sources. For example, today, and then the ADP report, which is scheduled to be released at 9:15, is one of the reference indicators. Of course, some analysts or institutions have also mentioned that when it comes to the ADP employment data, you have to look at, but don't give it too much weight either, just treat it as a reference. Because in reality, when it comes to data collection, it might not be as rigorous or as complete as previous official sources like the non-farm payrolls. There may be some areas where it's not quite as thorough. Generally speaking, most people still consider the non-farm payrolls to be a more significant reference indicator. Alright, let's continue to take a look at what's next. Global risk assets mostly declined on Tuesday. for example, in Asia and Europe. Of course, this is related to the previous day's performance in the US stock market. It was also mentioned that top executives on Wall Street has started issuing warnings about a potential pullback. Yesterday, it was mentioned that this could happen within a period of 12 to 24 months, and there might be a 10% pullback. Since the time frame involved is relatively long, right? How long is the next 2 years? That's about 500 trading days. So, within this period, it's even possible to see a correction of around 10%. Alright, no problem. Let's take a look. The S&P 500 index dropped by 1.17%, marking the largest single-day decline since October 10th, which was about 3 weeks ago. So let's try to explain this. When it comes to valuations, especially for tech stocks, are valuations too high? First, let's take a look at it from a market capitalization perspective. In the US stock market, there's what's called the $1 trillion club, referring to companies with a market capitalization of over $1 trillion. Let's list them out here first, and then we'll take a closer look at each one. Here, we're using the price-to-earnings ratio to look at their valuations. Of course, when it comes to tech stocks, using the PE ratio alone doesn't fully capture the real situation. Why is that? It's because many tech companies invest heavily in research and development. So what they're after is rapid revenue growth, and sometimes profit growth can lag behind. That's because revenue needs to grow first, and then over time, various R&D expenses or significant capital expenditures, as well as all sorts of fixed costs, are gradually amortized. The impact on profits isn't immediate, but that's okay. We're mainly talking about the price-to-earnings ratio for reference. First, as you see, the top ones, since we're ranking by market cap, from highest to lowest, are those above $1 trillion. Among them, there's one that's not exactly a pure tech stock, Berkshire Hathaway. It's the company run by the legendary investor Warren Buffett. By the end of this year, Buffett might be getting ready to hand over the reins to his successor. Yeah, people might think, that's right, he's getting old, and his successor is someone he personally chose. As for whether his successor can continue to carry forward the spirit of Berkshire Hathaway, or the investment philosophy of the Oracle of Omaha, that's something we'll have to wait and see. Also, since Berkshire actually holds a portion of Apple stock, for example. So that's why it's included here, because it's also one of the companies with a market value of over $1 trillion. Previously, Nvidia was said to be aiming for a $5 trillion market cap, but after some stock price corrections, it's now sitting at about $4.83 trillion. We also want to remind everyone that market capitalization and price-to-earnings ratios like these will fluctuate daily with changes in stock prices. The ratios and market values are different every day, so the information we're providing here is just based on data from, say, yesterday to today. This is constantly changing. If a company releases its financial report and earnings change, then these numbers will change as well. They really do change every day. Alright, let's first take a look at the company with the highest market capitalization, Nvidia. Its price-to-earnings ratio is 58, so let's make a mental note of that number. Now, as for Apple Incorporated, let's also keep an eye on some of its industry trends. Its PE ratio is about 36, which is pretty easy to remember. Microsoft is also at 36. These three companies are basically the top 3 in terms of market capitalization rankings. All of them are pretty solid companies. Recently, I've also been keeping a close eye on Google, which is Google, or rather Alphabet. Its price-to-earnings ratio is around 31, so let's just remember the whole number for now. What about Amazon? Well, as an e-commerce giant, and recently, thanks to its earnings report, its stock has also been on the rise. Its PE ratio is 37. Now, as for Broadcom, it's been making moves in areas like AI-related chips and other similar fields. Its ambition and growth potential are also undeniable. Alright, Tesla's PE ratio is 85. For Meta, after its earnings report, there was some market noise and a correction in its stock price. Now, its PE ratio is 21. So let's just look at the whole numbers first, okay? Whether you round up or down, it doesn't really matter. The main thing is to get a sense of the whole numbers. Now, for Tesla, its PE ratio here is shown as 319, so we'll just use the whole number. Now, the podcast here mentions A shares. Actually, between A shares and B shares, there isn't much difference in terms of PE ratio. It's about 21, so that's pretty close to Meta. And above that, let's go over it again. 58, okay? Apple is at 31, Microsoft at 36, Google at 31, Amazon at 37. Alright, so you have a general idea now. Next, let's take a look at each one in detail. Now, this answer, yesterday there was a drop, so that caused this. The Nasdaq index, for example, is showing weakness, which has affected today's Asian stock markets and the opening of the Taiwan stock market. Let's continue and look at Nvidia. What's happening with it, such as news about its industry interactions or competition. Here, it's mentioned that. On Tuesday, actually, we didn't mention AMD's PE ratio earlier, but that's okay. AMD announced its financial report on Tuesday. Their third quarter revenue grew by 36% to $9.2 billion, which is higher than previously expected. The expectation was an 8% increase. Alright, and at the same time, they also believe that in the coming quarter, revenue will grow another 25% to $9.6 billion. Although the growth rate might not be as high as before, the most important thing is, what people are worried about is, for example, in this financial report, whether AMD, which is catching up to Nvidia, has actually made an impact. In recent months, AMD has indeed won some new orders from customers who were originally Nvidia's main clients. For example, they started working with OpenAI, which is the parent company of ChatGPT. They've established this cooperative relationship. In addition, Oracle, some viewers or online friends also brought up this topic yesterday. Since Oracle is actively expanding its cloud computing business, they have also purchased related chips from AMD. So what does this have to do with Nvidia? Well, because Nvidia itself is a technology leader and currently the top player in the GPU and computing chip market, it continues to play a leading role. Let's take a look at this. Compared to its much larger competitor, this quarter's expected revenue is still nearly 30% lower. In other words, AMD is having a tough time catching up to Nvidia, but it has started to show some progress. Right? It's starting to show some development, but catching up is still tough. That's true. Let's take a look at what's next. The second biggest one, as we just mentioned, is Apple. Actually, when it comes to Apple's price movement, among the major tech giants yesterday, it performed relatively well. At least it stayed in the positive, with a gain of 0.37%. Alright, let's take a look at some industry news about Apple. The company is reportedly preparing, for the first time, to enter the low-cost computer market. This is just a rumor for now, but according to reports, it would be Apple's first time doing this. In the past, whether it was Macs or their laptops, they have always focused more on things like functionality, design aesthetics, and the overall ecosystem of their applications. These have been their main selling points. But now, it's said that they might develop a more budget-friendly Mac computer. This would attract users of devices like Chromebooks or entry-level Windows computers. In other words, people who originally used Chromebooks or some basic Windows computers might be drawn in because of this. Now that Apple is about to launch this, they might want to use Apple products, but maybe before, for reasons like budget concerns or not being used to Apple's operating system, they didn't. So maybe this model aimed at students. As for what exactly this new type of device for companies and regular users will be, that's still unclear at the moment. But you could say, since it's meant to replace or compete with these entry-level Windows devices, its main focus will be on simple tasks. Things like web browsing, document processing, or just some light media editing, because a lot of Apple fans, for example, often need to do things like video editing, whether it's simple or more involved. Or even things like live streaming, or doing design work. These are all related to producing very high-quality, detailed graphics or videos. Or even, for example, 3D modeling, technology, or architecture, These are all connected. And when it comes to tech, it's even more relevant. For instance, developers who are used to working within the Apple platform or ecosystem for app development, web development, or any kind of programming, if they're writing code too, then they probably wouldn't easily leave Apple. But if it's just some lighter tasks, like simple photo editing or basic things like word processing, then this new, relatively low-priced and budget-friendly laptop might be able to capture some market share in that segment. Alright, so even though Apple is targeting potential iPad buyers who prefer the traditional laptop experience, like those who want a bigger screen or more portability, whether this is actually true still needs to be confirmed by an official statement from Apple before we can verify this information. Alright, we just saw this. It should be FT. As for its stock price, compared to others, the drop yesterday wasn't as severe. So when we look at its price-to-earnings ratio just now, let's go back and take another look. It's 36, just like Apple. What about Google? We just saw it's 31, right? So considering its drop of about 2%, it's kind of in the middle, because we'll see more about that in a bit. And for Amazon, we just saw it's 37, down 1.84%. Actually, it went up a while ago because of positive earnings, but now it's going through a bit of a consolidation phase. Alright, next, let's look at Broadcom. Previously, they also announced things like ASIC-related chips, or how they're planning to expand into new industries. They actually have their own strategies for that. Plus, when it comes to chip development, they really hold an important position in the field. So even though its price fluctuation yesterday was a bit more significant, for now, we still need to keep watching how the industry develops. And even though we just saw that Broadcom's PE ratio is 85, right? With a PE of 85, the first thing we need to do is to look into it further. We need to further investigate and track its future performance and financial reports. In other words, 85 may seem high, but if its new business areas can drive continuous and rapid revenue growth, then whether this 85 is actually high or low is still up for debate. Alright, next, let's look at Meta. After Meta released its last financial report, its stock price had a pretty significant gap up, and then dropped. So recently, the stock price still hasn't shown any obvious improvement. We'll need to keep tracking it going forward. With so many users worldwide, we'll have to watch its profit margin, and also its performance in AI. They keep emphasizing their investment. Whether it's superintelligence or large AI models, they're continuously paying attention and investing. But as for whether this can actually turn into revenue or be monetized, and whether it can support their profits, that's still something to watch. But we just saw that its price-to-earnings ratio is 21. A PE of 21 actually isn't considered high for several tech companies, right? But the question is, can it meet the new expectations the market has for it? Why? Because valuation reflects the market's expectations, doesn't it? Why can Nvidia reach 58? Why can Broadcom reach 85? Because these institutions and investors have very high expectations for them, so the buying power pushes their valuations up to this level. Now, Meta has some new topics to address. For example, even though they've launched smart glasses, whether these will bring new contributions to their revenue or profits is something we still need to keep tracking. Alright, now let's look at Tesla. Among the tech giants, Tesla had a more noticeable drop. The decline yesterday was 5.15%. It's also involved in some new developments, especially something in particular. Let's take a look. Norway's sovereign wealth fund is opposing Tesla's plan to pay Musk a $1 trillion bonus, or rather, compensation. Here, it mentions that the world's largest sovereign wealth fund is against Tesla granting Musk this unprecedented stock award as an executive. This compensation reward is being issued in the form of stock. They said this is one of the largest opposition actions ever initiated by major shareholders. Actually, this is a bit different from what the chairman of the board has been expressing to everyone and to the market. As for this sovereign wealth fund, it ranks about 9th among Tesla's shareholders, but because of its reputation and standing, people might take its stance into consideration, especially as some of the other institutional investors further down the list are watching. And then, as for individual shareholders, they might also take this kind of statement into account. Let's see what he mentioned. Actually, he didn't deny Musk's leadership. He said he appreciates the tremendous value created by Musk's visionary leadership. What he means is actually the various innovative developments that Tesla has led in the past, such as new types of electric vehicles, and maybe in the future, the development of humanoid robots, an entirely new kind of industry. To briefly touch on related news, for example, a factory for this kind of robot. Well, Tesla also has that. The goal is to achieve mass production of 5,000 units by the end of this year, which means there are only about 2 months left until 2025, actually less than 2 months. They hope to reach this target, but as for whether they can actually do it, we'll need to keep following their progress and pay attention to any new developments or signals they release. Because, if they can manage to start mass production earlier, then people's concerns about them might be eased a bit, and it would also help them gain a stronger position in the market, whether that's in terms of influence or otherwise. Or, for example, when it comes to things like setting standards for robots or future pricing, whether they can break free from certain constraints. He used to focus more on electric vehicles, right? Recently, of course, there have been some concerns about sales in Europe. People are worried about his sales performance there, but his stock price is still soaring, mainly because people recognize Musk's past innovations and his achievements in business, and they have a generally positive view of him. But here, the Norwegian Sovereign Wealth Fund is mentioned. They brought up what they care about and what they're concerned about. The total amount of the incentive bonus might be too high, since there's never been such a large sum in history. The shares could also be diluted. In other words, the Sovereign Wealth Fund stake could be affected. If Musk is granted a lot of shares, his ownership percentage increases, which means everyone else's share decreases accordingly. Now, let's talk about risk mitigation measures for key personnel. This part is described a bit vaguely, but everyone should more or less understand what this wording implies. They're expressing concerns on several levels. Alright, let's take a look at the next part. The so-called $1 trillion club, ranked 9th by market value, is mentioned in the podcast. What's shown here is A shares, so don't be alarmed. In the top left corner, you'll see this is the amount for a single A share. It can be as high as over $731,000. So yesterday, the market might have treated it as a kind of safe haven, or of course, since the market was falling, people were looking for relatively more stable stocks. So it was seen as a short-term destination, which is why its stock price went up by 2.66% yesterday. Now, let's take a look at Berkshire Hathaway New, which is the B shares. Compared to the A shares, the price is more affordable and accessible at $487, about 66 cents. Yesterday, the stock price increased by 2.52%, which means, of course, investors have their choices. Let's look at some related news. Barron's Weekly estimated that previously in this. In his post, he mentioned that Berkshire Hathaway, which is Warren Buffett's company, might have, and he emphasized this as speculation, based on their financial reports and various public information, possibly sold 35 million shares of Apple stock. Actually, for the entire headquarters, this isn't a huge amount, because Berkshire Hathaway holds a total of $300 billion. According to his analysis, they might have even sold between 50 million to 100 million shares of Bank of America stock. That's his speculation. So, what he's saying is, after looking closely at the source of his speculation, it's because Berkshire Hathaway might be trying to hold more cash or has a tendency in that direction. Of course, to know the actual situation, we need to look at the 13F report. That is, if such a report is released on November 14th, we can follow up and track it further then. As for whether they are inclined to adjust positions where they've already made significant profits, like their Bank of America shares, which were bought at a relatively low cost, and also their long-held positions in the UK, we'll have to see. Because, by the end of this year, when the baton is passed, he might want to leave his successor with a large amount of cash, about $100 billion in cash positions. Whatever his reasoning may be, in any case, we can continue to keep an eye on him going forward and treat this as another useful source of information for reference. Alright, so here we also notice the second point, which is today's headline, U.S. Government Shutdown, New Uncertainty. Actually, this headline can be interpreted from two perspectives. First, what is it? A U.S. government shutdown is a new uncertainty. So why is it considered a new uncertainty? Let me explain it to everyone here. The deadlock over healthcare, insurance, and spending priorities is just the usual dispute between the Democrats and Republicans. In the past, the shutdown has already reached its 36th day, which means it's the longest federal shutdown in history. Nothing like this has happened before. Previously, the longest was 35 days. I'll show you more about that in a bit. Also, this new milestone means a new wave of uncertainty has begun, because we've never experienced a shutdown this long before. Even though we can learn from past examples, we can only use them as a rough reference. But once it goes beyond that, no one knows. Will it be 40 days, 45 days, 50 days, or even 2 months? No one can say, and that's the unknown we're facing. Also, he mentioned that the economic losses are getting worse. As I mentioned at the very beginning, there's uncertainty about the economy and concerns about it. Could this also be related to the valuation of tech stocks? Or is it that after the market starts to decline, these doubts and worries begin to surface? Alright, and also, the funds used to pay the salaries of active-duty military personnel, as well as, for example, to provide food assistance to some low and middle-income or more disadvantaged groups, because this is about people's livelihoods, right? Everyone needs to eat, after all. Everyone has to eat. This budget might run out before the end of November. So, today is the 5th, right? There are only about 20-something days left, so we'll have to see if the Democrats and Republicans can make any concessions or compromises. Next, we'll remind everyone that the busiest travel season of the year is coming up. What is it? For example, Thanksgiving and Christmas. It's kind of like, well, to put it another way, it's a time when people get together with family, reunite, or have gatherings. People travel everywhere, so the season lasts a long time, especially since the US is such a big country, right? Their airline industry is probably even more developed. So, we need to understand that right now, because of the government shutdown, some air traffic controllers and related government civil aviation staff can't go to work. They know that if they go to work, they won't get paid. So, that's why. They might look for a side job or just stay at home for now. Because of this situation, for example, today we also saw in the news that a UPS plane had an accident. Of course, it's still unclear who is responsible for it. But people are starting to worry about this kind of situation in aviation. For example, there are even news reports suggesting that maybe the US might shut down part of its air freight, or even close its entire airspace, because there really just aren't enough people. This could lead to some safety issues, and if that really happens, it would be extremely serious. Alright, so this kind of economic uncertainty, and the uncertainty around public transportation, will gradually start to show up in different ways. Okay, so here, we've put together a brief summary about the last government shutdown, the last time the government shut down. It lasted for 35 days, from December 22nd, 2018, to January 25th, 2019. Let's take a look here, on this candlestick. It was around December 21st. And this candlestick is from January 25th, 2019, while this one is from December 21st, 2018. At that time, the situation developed like this, according to Lin Baichi. This is kind of like our current suspension period. Right now, the suspension has lasted just about 35 or 36 days during this time. But since our current suspension period hasn't ended yet, I'm not sure if we can use this as a reference. However, another consideration or a single point is, if it starts moving now, could it actually be more likely to resemble this situation here? We also need to think about this carefully. In other words, these 35 days, this period, overlaps with or is quite similar to the previous one. Back in 2018, they actually didn't know how long the suspension would last, right? Before the shutdown, they didn't know how long it would last, so the stock prices started to drop due to the uncertainty. But after the shutdown actually happened, they realized, hey, maybe things weren't as bad as they thought, so the prices started to rebound a bit. Now, though, we're facing another problem. After 35 or 36 days, it's already become a new record-breaking shutdown. After that, for example, whether or not economic data is being released, that gradually starts to affect people's judgments as well. Just yesterday, I mentioned that when it's pouring rain, or even during a typhoon, people still drive or ride their scooters. So they become more and more cautious, and on top of that, they're all highly trained, whether they're PhDs in economics or various types of financial experts, so they tend to be even more careful. That's why the December rate cut is also becoming less and less certain. Of course, they've already given the market a heads up about this. It's not that certain, you know. Okay, so at this point, we also need to pay attention. During periods like this in history, more or less, some financial institutions will do things like this, and some have even started making estimates. So, regarding the previous concerns, will those same worries be lessened this time? Well, they might still exist, but perhaps they'll be reduced. In other words, when it comes to uncertainty, people can more or less make some estimates now, so let's take a look at that next. This brings us to the second implication of this new variable, the US government shutdown. Is it possible that the US government shutdown could bring about new variables, prompting some changes, maybe even reopening? Alright, let's take a look at the Democratic members of the House of Representatives. He is eager to win the New Jersey governor's election. Here, we're talking about what's reported in the news. According to the Associated Press, with 63% of the votes counted, his lead is already so significant that it's quite clear. So, of course, there is a very high chance, a strong likelihood, that he will win the New Jersey governor's race. Break time equals 0.5s. / he might have even already announced his lead on social media, or perhaps even declared victory himself. Alright, so let's take a look at this. Since he's a Democrat, in this state's election, actually, the last time when Trump won the presidential election, this state did narrow the gap in votes with the Democrats of the although it's still leaning more toward the Democrats, now with such a clear lead, will this make some Democratic politicians feel like, hey, maybe public opinion is currently on their side? So, that's something we can observe. His victory in 2016 will be seen as a rejection of Trump, at least in part, since this state has always leaned more Democratic. Now, this sheriff here said that before the results came out, he mentioned that some national Democratic politicians might interpret it as a sign that the current trend is in their favor. For example, the Democrats have done well in several elections this time, including in places like Virginia and New York City. Their main appeal is to focus on the economy and people's livelihoods. In other words, Trump actually talked about a lot of different issues, like immigration and tariffs, but this time the Democrats just concentrated on these few topics. These kinds of issues about people's livelihoods and the economy focus on the cost of living and housing. So for these voters, because they personally feel, oh, how much money am I actually spending each month or week? Is my economic situation good or not? How are my personal finances? They have these worries and concerns about their future prospects. As for the Democratic politicians, if the public opinion is in their favor, will they take an even tougher stance? This is something worth considering. What is the root cause behind all these positions? Previously, some Republican lawmakers actually hoped to restart the government, right? And of course, the Democrats voted against it because they wanted the Trump administration to negotiate on the national healthcare-related bill. I said that after some concessions are made, the Democrats would then make their own concessions. But just a couple of days ago, Trump also made a statement in the news, saying that he hopes to reopen first, and then negotiate after reopening. But after reopening, will Trump actually negotiate with you? Will he really talk to these Democrats? Actually, there's a good chance that he won't. So maybe the Democrats have already figured out what Trump intends, which is why they can't just go along with what he wants. That's how both sides have ended up stuck in a loop. The Democrats say Trump has to make concessions first before they'll agree to reopen the government, while Trump says the government should reopen first, and then they'll talk. Right now, the core interests and values of both sides still haven't been resolved. That's also why, even though the election brought some new results, there are signs that. But will Trump really back down so easily? Maybe when it comes to China, he realizes he needs to buy some time, so he's taking a softer approach. But whether he'll take the same approach with the Democrats at home, or that attitude might not necessarily be the same. Because up until now, if you look at some news reports, for example, he still blames things like the government shutdown on the Democrats' vetoes. He even attributes the recent stock market rally to his consistent tariff policies. He claims, because of my tariff measures, the stock market has hit new highs. So he credits the stock market's performance to these policies. As for these achievements, he attributes them to his tariffs. But back in April, he probably wouldn't have mentioned tariffs as the reason for the stock market's decline, right? That's just how it is. Alright, let's take a look. Yesterday, the Nasdaq index dropped by 4.01%, which was relatively the weakest among the major indices. This could be related to the performance of certain stocks, like Nvidia, for example. And of course, Nvidia has a large weighting in the index. Whether it's the major indices or the memory sector, there have been some corrections. We'll have to keep an eye on how things develop and see if this will continue to spread, because honestly, it's not always predictable. Sometimes, when the selling pressure starts to show up. It's strange. When that happens, the media starts to speculate and dig up all sorts of new negative news. Like today, after going through all kinds of news, I noticed that the positive news, those that are really optimistic about the situation, have become much fewer. There are a lot fewer of those, so in situations like this, you really need to pay attention to whether it's actually true. Will there be more related negative news gradually surfacing? These negative reports aren't entirely intentional on the part of the media, because they're also influenced by the prevailing mood. Alright, let's take a look at the Dow Jones Index. So this is the Dow Jones Index from yesterday, and earlier I mentioned 2018 and 2019. Now, the Dow Jones Index is actually one of the major indices that has experienced a relatively smaller drop compared to the others. Negative 0.53%. Alright, as for the S&P, it dropped by 1.17%, and value stocks fell by 2.07%. So, relatively speaking, tech stocks are under more pressure. Now, let's take a look at some major international and investment news. This was also mentioned here. There are hardly any positive news stories, and negative ones are starting to appear. So, what's happening in the private credit sector? There are some cracks showing. For example, the CEO, Katie, mentioned that she is very concerned about certain parts of private credit. I think this is similar to what we've seen before with things like auto loans or auto parts companies. Some of this is related to bankruptcy or liquidation news, or other related matters. He pointed out something important here that I think everyone should pay attention to. The Chief Investment Officer, Tony Yasharov, said this. As for the terms of the contracts, there's a phenomenon where the standards are being lowered in competition. So, will this have any impact? This reminds me of what happened before, whether it was the so-called Big Short or the subprime mortgage bubble. At the beginning of the subprime bubble, there were actually some standards for those loans, for example, subprime mortgages. But later on, maybe different companies started to lower their standards in order to compete for business or for other reasons. So then it started. For example, the terms of the contracts became more relaxed. Maybe people whose income wasn't sufficient or whatever could still get loans to buy houses or something like that. So some people started to worry, right? If there's a race to the bottom in contract terms, and if the standards really keep getting lower, then people who aren't qualified, or whose income or credit scores aren't enough, various types of related issues, could get involved. What if they really aren't qualified? They might still be able to borrow money. And you know, this isn't even something you typically see in regular banks, because it's happening outside of the highly regulated banking industry. In other words, it's not even in the banking sector anymore. For example, what about the usual ones? JP Morgan Chase, for instance. Or regular American banks, these common banks. The phenomenon doesn't show up in their financial statements or their data. But they're saying this has already ballooned into an industry worth as much as $1.7 trillion. $1.7 trillion is no small amount. If there really is an industry this big, and it also lacks regulation, then doesn't that mean, actually, right now, it's kind of. Isn't this a situation that's getting out of control? This is something we need to keep a close eye on. Alright, let's take another look. Just now we mentioned concerns about the US economy, and this is also related to government shutdowns. The longest shutdown cost the US economy $1.5 billion per week. And this is also related to economic growth in the fourth quarter. Here, we can see that the shutdown has already lasted 36 days, surpassing the previous record for a first term. So you could say Trump has outdone Trump. For every week the government is shut down, it causes an economic loss of $10 to $30 billion. Multiple estimates even suggest that the weekly economic loss is around $15 billion. Alright, and in fact, some economists have analyzed this, and we can also use their analysis as a reference. Currently, the economy is even more fragile than it was 7 years ago, back in 2018. When we say fragile, maybe that's putting it a bit strongly, but the point is that many Americans are deeply worried about the job situation. Inflation still hasn't reached the Federal Reserve's target. Of course, it's gradually moving in that direction, but the job market really hasn't been doing well lately. So on the 3rd, we might need to take a look and see whether the 9/15 ADP report will actually be released, and if so, what the numbers will be. As for the employment situation, maybe that's also one of the concerns behind the Fed cutting rates twice this time, and there's another hidden worry: debt. Now, it's said that this is different from previous shutdowns. What's coming up next is a much bigger holiday: Thanksgiving and Christmas. Before the end of the year, as we just saw, it was already from December 22nd to January, right? That means in the past, the shutdown only happened after these holidays were almost over. But now, the shutdown is ongoing, and after it ends, it will be right around Thanksgiving and Christmas. 3rd grade. Of course, on another level, if the shutdown ends and things reopen before then it's not really a problem. Oh, but if not, we're talking about millions of people here, not just a few hundred. We're talking about millions of Americans who won't be able to get the food assistance they need for their basic livelihood. So this could increase things like hunger, or even lead to some social unrest. Whether that will happen is something we need to keep watching. There have also been some polls, relevant polls actually, one from NBC. There are actually more voices in the US opposing or disagreeing with President Trump. In other words, as we've mentioned before, in a presidential system like this, people generally tend to place the main responsibility on the ruling party, which is the Republican Party in this case. And Trump himself is someone who often speaks publicly in the media or gives speeches. There are all kinds of news about him. So, for example, when people experience flight delays, they might check the news and see where Trump is now, and then they start to wonder, oh, is this flight delay somehow connected to Trump? Similarly, if someone doesn't have anything to eat, they might think, hey, could it be Trump's fault that I have nothing to eat? Of course, this is just a main association people make, but whether or not that's actually the case and how it will affect them in the future remains to be seen. Next year's midterm election voting intentions aren't that relevant yet. The key is to see how long Trump can withstand this pressure, how long he can hold out. As for the Democrats, will they, now that they feel the momentum is on their side, further ramp up their efforts in opposition? In other words, will they? They might not necessarily want things to open up this quickly. Of course, all of this is just speculation. It might not actually happen. If, of course, the US government is able to reopen, and the American people can smoothly receive this kind of aid and support, that would definitely be better. That would be an optimistic outcome, and if it's possible, that would be the best scenario. Because, after all, nobody wants to see them suffer or go hungry. Now, let's take a look at the ADP employment report from October 5th and see what was released at 9:15. Looking at the situation from the ADP report, there was an increase of 42,000 jobs, which is higher than market expectations. Let's take a closer look at this. Originally, before the announcement, the previous figure showed a decrease of 32,000 jobs. It was a decrease of 32,000. Let's take a look here. The most recent previous period was a decrease of 32,000 jobs. And what about Bloomberg? The original expectation was an increase of 30,000 jobs, right? But as we just saw, it's 40,000, an increase of 42,000 jobs, 42,000, so it's higher than Bloomberg's general forecast. So in this case, could good news about employment actually be bad news for the market? In other words, what was the previous logic behind rate cuts? When the economy or employment wasn't doing so well, the market expected the Fed to cut rates, which people thought would support the stock market, so there was optimism and stocks went up. But what about good economic news like this? What about good news on employment? Could it actually make the stock market more worried? People might start to wonder, will the Fed still cut rates in December? Oh, and as he said before, it's not certain, because he needs to look at the data, right? If he doesn't cut rates, will the optimism in the stock market turn neutral, or even start to become pessimistic? Plus, with the recent valuations of tech stocks, maybe everyone needs to continue to stay cautious and mindful of risks. Doesn't that make sense? If you already have positions, you might want to pay attention to your cash levels and maybe adjust or trim your positions a bit. Or if you were planning to buy in, it might be wise to wait and see for now. These are all possible strategies to consider. Alright, let's take another look. As for this week's company earnings reports, we have AMD, Uber, McDonald's, AppLovin, Qualcomm, ARM, and Rare Earth Company MP. Now, let's take a look at Uber. They released a rather conservative profit forecast, so this had a somewhat negative impact on its stock price. Its legal expenses also ate into its third quarter profits. Alright, let's take a look at its latest financials. Revenue was $1.11 billion, which was below analysts' previous revenue expectations. It was $1.62 billion, so there's actually quite a gap here. Okay, and in addition, its adjusted profit also falls within this range. They first gave a range, usually from $2.41 billion to $2.51 billion, so the midpoint is about $2.46 billion. That's still below analyst expectations of $2.49 billion. So its stock price pulled back a bit here, dropping by 5.06%. Of course, if you look more closely at its price movements, maybe there were some bargain hunting activities during the session, but it's hard to say for sure whether that's actually related to any real improvement going forward. I still suggest everyone keep an eye on it, and here's why. When you have a situation like this, where results fall short of expectations and the financial report comes out, the initial market reaction might be more genuine, but of course, you still need to keep watching it over time. We can agree that Uber is a growth-oriented company and business, so please pay attention to trends in the related industries. After all, Uber has been continuously expanding lately, for example. Developments like those with Robert Tacey are also worth noting. Now, let's take a look at the pre-market movers in the US stock market. For example, PPL and ANGN are showing pretty clear gains. On the other hand, for declines, Axon and Consistency are down. Consistency is down by 8.72%. As for AMD, it's showing some weakness in pre-market trading. There are also a few notable stocks like PLTR, which is down slightly by 2.61%. Dell is down 2.35%, and UPS, possibly affected by some unexpected news, is down 1.46%. In addition, Nvidia is down by about 1%. Of course, these numbers were taken earlier when I was preparing this report, so there could still be changes since it's still pre-market. Oracle is down 1.08%. We'll talk more about Oracle later, since a viewer asked about it yesterday. I'll give you all some reference on that in a bit. Alright, so in pre-market trading, Amgen, which is a biotech and pharmaceutical company involved in new drug innovation, not only reported earnings that beat expectations, but also raised its full-year earnings forecast. So, this has caused its stock price to strengthen a bit in pre-market trading. We'll have to see if this trend continues after the market opens today and how things develop from there. As for AMD, just to briefly mention it, they make semiconductor-related chips. Of course, their earnings report came out today, and after its release, it was pretty much in line with market expectations. There wasn't much of a difference. But why is it that its stock is falling in pre-market trading now? Or rather, why is it dropping after hours today? Actually, it's the same reason as what we mentioned earlier about tech stock valuations. People are starting to hesitate a bit and are expressing some concerns. As we just mentioned, some analysts are actually quite optimistic about it this year, because, for example, it's starting to catch up with OpenAI, which we talked about earlier, and that's related to Oracle's business. They've already secured some new orders. Alright, let's take a look. He's more concerned about profit margins and a few other aspects. This year has been good for him, with the stock price more than doubling. Could the big gains be a reason for the correction we saw yesterday or in pre-market trading today? This is something everyone should keep following going forward. We just mentioned US stock Oracle because a viewer asked about it yesterday. Let me share its current P ratio, about 55.33 times. As for what's next, we need to keep tracking it, since like the overall market, tech stocks can change quickly. Sometimes, competition and cooperation in the industry shift fast due to new developments. Once the news comes out in English, there will be some changes, so I encourage everyone to pay close attention, whether it's to important financial reports or to shifts in the industry. You should really try to understand these things yourself. If you're still a bit unfamiliar with tech stocks, you can start with industries you're more familiar with, like retail or shipping, for example. You can look for related companies in those areas first. If you work in such an industry, being in that environment daily gives you a better understanding of shipping industry developments. For example, people in Hsinchu Science Park are usually more aware of tech stocks or chips. They tend to be better informed about news and probably have a clearer sense of the industry's outlook than others. Clearer opinions. Alright, that's it for today's group discussion. Good night. Thank you all so much for watching, and also thanks to the online viewers who submitted questions. We've prepared some extra materials here as well. I wish everyone the best in your upcoming trades and investments. In addition to maintaining a strong sense of risk awareness as mentioned earlier, you should also pay attention to your capital levels. When it comes to stock selection, be even more cautious and keep an eye on the actual situations when making purchases. I hope everyone can avoid misfortune and seize good opportunities, and that your trading goes smoothly. That's all for Group discussion good night. See you next time. Bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.